Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of September 22nd, 2025. Let's get started. The KFC trade is back. Technology, communication services, financials. That is a full risk-on type alignment here. And as you can see by the high-ranking scores, there's a little bit of conviction there. 4 for technology, 5 for communication services with 2s and 1s across the board. Solid 3s in financials. And then, the avoids are really more the defensive stocks, consumer staples, healthcare, utilities, cyclical energy toward the bottom here as well. This is really more one of the more aligned aligned tables that I've seen in quite a long time here. 1, 2, 3, 4, 5, 6, and then energy breaks up our lineup here. But overall, looking very aligned. This aligns with the market. Market's making all-time highs, and technology is back to leading. So that is encouraging to see. As we were starting to see this kind of disalignment where the S&P 500 was making fresh highs and really didn't have its leader. We'll see if it sticks. Obviously, it's not a projection of any sorts, but it aligns with what we were seeing across the board. Going into our heat map, again, this is the type of heat map that I like to see. We got that clumping of dark green up at the top. That dark reds are sitting at the bottom here with our light reds and yellows and light greens kind of sitting in the middle here. Technology, really strong, 0.79% on the trading week. That's significant for those that are new. We did a study. Anything over 0.4 really shows significance in the trading week, and this is 0.79. Also showing some significance, which is rarely the case, but we're seeing 0.46 for 2, which doesn't happen very often. Normally, we kind of have one leader that kind of rips out of the pack. Everything else kind of trails slowly behind here. But a lot of money flowing into both technology and communication services. Financials showing really mostly some strength in tactical month strategic quarter. It is a 3 on the trading week, but a bit real close to 0. Money flowing hard out of healthcare, -0.47%. Overall, last week we had a 2.2% increase. If you added all the 11 sector spiders together in terms of money flowing in, it was increased by 2%, with 1.9 being the largest daily increase on Wednesday of last week. We are sitting at all-time highs for our assets under management. So if you look at what this chart is adding up the AUMs of all 11 sector spiders, coming up with one number, and we are at an all-time high as we're approaching $340 billion. This chart itself has been, I think, a really good indicator in terms of how to treat the broader market. So like I said, we have the 11 sector spiders AUM. This is the red line is a 21-day moving average, and on below we have a price chart of SPY. As long as this AUM number has been above the 21-day moving average, we've seen just really strong price appreciation. Since the last wiggle that we had in late August, we've kind of been off to the races here, good for about 4.5% increase on the S&P 500. So as of right now, this chart very much aligns with our SEAF table, as in this is telling us that assets are strongly flowing into the 11 sector spiders. We have a nice uptrend in the S&P 500 with our leaders of tech and communication services. Heading into our rainbow charts. Communication services, like I said, we've been talking about this over the last couple of weeks and months. Money has been kind of inconsistent in terms of its flowing in and out, but it looks like we're starting to get a little bit of sustained here for the communication services. We've got a nice uptrend in its relative outperformance versus SPY. Communication services is a great place to be, and I really like to see these fresh highs in the relative outperformance chart. Technology coming back in strong after a little bit of a brief interlude, coming back in the top sector. Really in that upper favor, when we see these big relative outperformance moves, that tends to come with sustained relative outperformance. So we'll be looking to see if that is something that can happen. Again, we don't project these cash flows. We're just following the money, but right back in the upper favored, and any kind of sustained time in that upper favor is going to give us that nice, strong relative outperformance. Financials. Financials is a third. As I said, really kind of being driven by its tactical month and strategic quarter. It is sitting in upper favored. We haven't seen that on the relative outperformance side of the chart as of yet. That could be partially due to the kind of weakness in the weekly flows. But the way the SEAF model works is, we back test in the top three. It's really important to be in those top three because we never know where that relative outperformance is going to come. We know that money is flowing in. We know we have momentum through at least 3 time periods. But what ETF out of that top three is going to pop isn't always just the top one or the top two. There is a little bit of a higher correlation when we have those strong weekly inflow numbers. But financials overall relative to the other ETFs and the sector spiders is also a good place to be. We do also appear to have some support here on the relative performance side of the chart, which is encouraging. Utilities, utilities kind of sitting in that middle favorite for a while. We got a little bit of relative outperformance. We have now crashed down into a void, which has started this relative underperformance trend in the S&P versus the S&P 500. Last but not least is healthcare. Healthcare made 2 separate attempts here to get into favored. There was just not enough sustained flows to kind of vault us into that upper favored territory, and this downward trend of relative performance continues. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.